Welcome traders to this new market review for Nasdaq for week 8. First, let's dive into the economic calendar for last week. We started the week on Monday with a bank holiday and FOMC member Waller speaking at 6 p.m. At Tuesday, we had 8:30 a.m. Empire State Manufacturing Index and President Donald Trump speaking twice at 4:13 p.m. and 9 p.m. On Wednesday, 2 p.m. we had FOMC meeting minutes. At 5 p.m. we had President Donald Trump speaking again. On Thursday at 8:30 a.m. we had unemployment claims and the Philly Fed manufacturing index. At 12 p.m. we had crude oil inventories, not that much of an impact on the indices. At 7:20 p.m. we had President Trump speaking again. On Friday, 9:45 p.m. a.m. we had the flash manufacturing PMI and the flash services PMI. At 10 a.m. we had the existing home sales and consumer sentiment. At 3:56 p.m. we had President Trump speaking again. So, on the weekly chart, we can see that the last 2 weeks, the first weeks of the month, we rallied up, trading into these relative equal highs, into consequent encroachment of the premium wick. And last week, we traded up, and on Friday, we vanished that whole rally and trading down with sell-side delivery. So on the daily chart, we can see that Monday isn't there due to the bank holiday. On Tuesday, we had a small range due to the fact that it was the day after the bank holiday. On Wednesday, we had an inside day, which is a catalyst for a large range day afterwards, which we pretty much had on Thursday. Traded into consequent encroachment of the daily busy. On Thursday, closed at 22,135.75. And on Friday, we turtle souped Thursday's high and traded all the way down into the consequent encroachment of the discount wick over here. So if we measure this candle's low to this candle's high, we can see that. Let me put the numbers to the left. Perfect. The -1 standard deviation, which is a symmetrical swing of this upwards rally, came in at 21,656.5, and the low of the week came in at 21,652.75. So we closed we printed the low just below the -1 standard deviation level, and we displaced below the daily busy, which I was monitoring this week. So yeah, go to the 1 hour chart. Monday we had consolidation. Thursday we took Monday's high, printing these relative equal highs, trading down into these relative equal lows printed on Monday. At this moment in time, I was expecting this to be the low of the week, and I thought continuation towards the upside into these relative equal highs and potentially into these relative equal highs, which was the all-time high for Nasdaq. I thought we would have an up close week, but I couldn't be more wrong than that statement. So let's dive into the lower time frames for this week. On Tuesday, we have the purple shaded area, which is the midnight opening range. Traded above it during the London session, creating this low at the midnight opening range high. During the 5 a.m. macro, we traded into the midpoint of the midnight opening range. And at 8:30 a.m. we had a medium impact news driver. So what do we know if we have 8:30 a.m. news? That we can treat it like the opening bell, so a Judas swing afterwards can be anticipated. And as you can see, buy side delivery was next. And we created this manipulation up. Just fell short of trading above this high over here, but took all these relative equal highs, which carried buy stops above it. And as you can see over here, traded to the downside, failure swings over here, trade all the way down. Over here, the opening bell was there. We opened right at the midnight opening range low, trading into the new day opening gap for this day, trading back into the midnight opening range, into the opening range gap high, into this SIBI over here, and sell side delivery was next. So opening range gap consequent encroachment got reached. Okay, let me. So turn off the new week opening gaps and new week opening gaps and new day opening gaps, so it's a little bit cleaner. Okay, at 9:44 a.m. we have the first presentation over here, which was not the first presentation as I can see now, because this was the first presentation over here. So first fair value gap over here, displays to the downside, retracing into the opening range gap, but fell short of trading into the first presentation, creating this low over here during the 10:30 a.m. macro. Not a really exciting day if you ask me. So during the last hour of trading at 4 p.m. exactly, must be random, trading back into the opening range gap consequent encroachment into the first presentation. So just hindsight talking, but how can you use this in the future, and how am I using this when trading? If the first presentation isn't used during the AM session, then I expect price to trade into the first presentation later in the day, or in the worst case, the very next day. So if you see this price action unfold and you can see that the first presentation isn't used, then you can expect the first presentation to be used later in the day. So when price is trading to the downside, you just know that at some point in time on the very same day, you can expect price to trade into the first presentation with the buy side of the curve, which unfolded over here. So as you can see, the lunch lows were over here, AM lows were over here. These were just too clean. Same can be said for these lows over here. So During the 12 p.m. macro, we traded into the opening range gap low, trading all the way down into these lows, into lunch low and the AM low. Turtle souped it during the 2 p.m. macro. And over here, we see that discount arrays, premium arrays are failing and discount arrays are being respected. So looking into the PM price action, you can see this displacement, which is the first sign that we can be in a buy program. You see it being respected over here, creating a new busy over here. Choppy price action in the latter part of the PM session, trading back into the busy created over here, and this up close candle over here. Note price traded into the up close candle but didn't trade into the low of that up close candle, and expansion was next, measuring to the high, talking about 88.25 points, which is pretty decent for the day after a bank holiday. What I forgot to say is that when you have a bank holiday, ICT taught us that the very next day you want to avoid the AM session. And as you can see, well, this is the reason why. Could have captured some minor scalps over here, but the real move, if you ask me, was in the PM session. So ICT says that you have to wait at least for 13:30 p.m. or 2 p.m. and then the better price action of that day will unfold. And note what happened this very day. On Wednesday, we had just a beautiful day of price action, if you ask me, due to the fact that it was a Wednesday, and Wednesdays are generally good days to trade, and due to the fact that Monday was bank holiday, so Monday was just not so nice. The day after Monday, Tuesday, wasn't really nice as well. So I expected Wednesday to have better price action, and yeah, well, that was what happened that day. So during the Asian session, we created these relative equal highs over here. During London, we pretty much had consolidation. During the London lunch, we had this sell side delivery, leaving these relative equal highs intact. So 7 a.m. macro was a beautiful trade opportunity. We took these relative equal lows over here. Remember that in the afternoon we had the FOMC meeting minutes, so generally pre-market provides a good trading opportunity. And that happened over here. So what happened over here? Sell side delivery, trading into these relative equal lows with this sudden and quick move down, which was just manipulation, taking the sell stops below the low. First displacement, but we didn't take this high over here yet, so this could just be a retracement into this range, trading down. But over here, this was the first discount array, which was a 1 minute bullish order block over here, got respected, traded up. Note over here, we had 1, 2, 3 busies, and generally what happens is that the second one will be respected, and the third one we didn't really trade into it, and this happens quite a lot, so this can help you in fine-tuning your trade. So are you taking the upper busy over here as your entry or the second one? Well, you could just use both by pyramiding. First entry over here, second one over here, and then you can decide to put your stop loss all the way down over here or below this candle's low. So let me draw this for now. 5.25 handle stop loss. Entry 22,208.75 and the low came in at 22,208.5. So just one tick below your entry price, which would lead to a fill. And if I measure it towards this high over here, let me see. So within, let me see, 4 past 7 your exit and 1 past 7 your entry. So just within 3 minutes of time, yeah, you are able to capture a 7.6 R trade. And I don't even measure it towards this high or this high. So yeah, beautiful trading opportunity during the pre-market session. And what happened next? Okay, we created this high over here, displacement, trading into, retracing into this range over here, SIBI, and a bearish inversion fair value gap. Just fell short of trading into the inversion fair value gap over here, but we traded into this 15-second SIBI over here. So trading all the way down, taking the 7M macro low or the pre-market low. And over here, the market opened with a discount opening range gap of 17.25 handles, which is usually indicative of a high resistance liquidity run or a choppy AM session unfolding. But due to the fact that it's Wednesday, I concluded that this was the reason why we had beautiful price action during the AM and during the PM session. So we opened over here, trading down into this low, trading all the way up into opening range gap consequent encroachment within 5 minutes. Yeah, 70% of the cases between 9:30 a.m. and 10 a.m. the opening range gap consequent encroachment is reached, and it happened over here. So I'm looking at a 15-second chart and the 1-minute chart. This candle's low towards this candle's high is the first presentation, which was a busy field over here, tracing into this SIBI over here, trading down, SIBI bearish inversion fair value gap consequent encroachment reached over here, trading to the downside. And between 9:30 a.m. and 10 a.m. we had sell side delivery, which created the classic opening range manipulation and the real move starting after 10 a.m. So creating this low over here, busy over here, and it fails. And over here we went from the sell side of the curve into the buy side of the curve. Note that the low was formed at 9 minutes past 10 a.m. which was inside the 10 a.m. macro. And over here you can see that the discount arrays are being respected. And buy side delivery was next. Note that this tiny portion of the opening range gap was still open. To be honest, I went long somewhere inside this price action, and yeah, I managed to make some gains on this upwards move, which was, I think, yeah, around 70 handles. But this move over here took some stop losses over here, and unfortunately it took my stop loss as well. So I missed the rest of the move. Yeah, and that's part of trading as well. Note that the Asia relative equal highs are still open over here. London high was still open. Over here, during the 1 p.m. macro, we traded into the lunch hour low over here, these relative equal lows, into the first presentation of Wednesday. And we had some beautiful buy side delivery into the relative equal highs over here. The high came in at 22,290.75. Yeah, you can see that this high came in at 22,298.5. So we took the relative equal highs during Asia. And note, we're gonna look into the time factor over here. So at 2 p.m. this low was created. What happened at 2 p.m? We had FOMC meeting minutes. Generally what happens is that after 2 p.m. we have a manipulation move, which was this buy side delivery over here. I'm measuring from somewhere around here. 60 handles, not bad. Going into the 3 p.m. macro, we swept these relative equal highs, displaced to the downside. As you can see over here, retracing back into this bearish breaker over here. And sell side delivery was next. Note that price left these relative equal lows over here. So that was just a beautiful, what is it, 40 handles or so. Took these relative equal highs over here, and continuation towards the downside was next. Yeah, just backtest this for yourself. I already did this, and my data tells me this, that yeah, I'm pretty profitable on this news event, which is the FOMC meeting minutes. I think around 70% of the cases this is what unfolds. So after 2 p.m. we have the manipulation, and afterwards you have the stronger move. So the manipulation was up, and the stronger move was the sell side delivery over here. Note the bodies over here respecting the opening range gap, and that was pretty much it for Wednesday's price action. On Thursday we created midnight opening range over here, manipulation towards the downside, waiting for the right moment in time, which is the 2 a.m. macro, which is the start of the London kill zone. We swept this pre-London low over here, traded up into midnight opening range low, tracing into the short-term low over here, into the open portion of the busy, into the bullish order block over here, and buy side delivery was next. So measuring, yeah, 70 handles or so during the London session is pretty decent if you ask me. Going into the opening bell, we had yeah, classic consolidation pre-market. over here, relative equal lows between 9 a.m. and 9:30 a.m. At 9:30 a.m. we swept the sell side liquidity first, buy side liquidity next, creating the high over here, displacing to the downside, retracing, deep retracement into opening range gap, consequent encroachment over here, created the first presentation over here. And why am I why don't I remove the first presentations the very next day? Look at this. I have them over here: Monday, Tuesday, Wednesday, Thursday, Friday, and even the old ones I keep over here. Why am I doing this? First presentation of Monday, used on Thursday. Okay. And why do I keep the new week opening gaps and new day opening gaps in these maps? New week opening gap. Okay, interesting. So we have the old first presentations clustered over here, new week opening gap over here, and old new day opening gaps over here. Look at this wick. Well, measuring from this new day opening gap low, which was Tuesday's new day opening gap. Yeah, less than one handle above it. So if you have a cluster of these levels coming together, then yeah, I pretty much know that this will be used by price action, and important highs and lows will be formed around these cluster of levels. So opening bell, taking minor, sell side first, buy side next over here, expanding towards the downside, retracing into opening range gap, and you can see that the first presentation wasn't used as a reclaimed SIBI, so I can expect somewhere in the future that this first presentation will be used again. So in other words, when price is trading down into the daily busy, look at the start of the video where I annotated this busy. So at this moment in time, you just know that later in time, probably during the same day or the very next day, that this first presentation may be used again in the future. And note what happened next. So sharp movement towards the downside into the discount array, which was the daily busy again. Midpoint annotated over here. Note how long price is spending there. Not too long. Trading into it, creating the low just past, I think it, don't want to measure it for now, but I think it was 1.5 points just below it. Trading one candle into it. And buy side delivery was next into short-term premium, which was this beautiful SIBI over here. Note that we have 1, 2, 3 SIBIs explained. Yeah, just explained by me that the second one will be used, and that's where this high was formed, and price just fell short of trading into this SIBI, which could be anticipated. So pretty choppy AM session. Could have captured some short over here. Yeah, minor small longs over here, but still don't be mistaken, from around 22,000 even towards 22,100, making it a 100 handle move over here. Yeah, And the rest of the AM session, yeah, we had buy side delivery, but it was a high resistance liquidity run where every previous candle has been overlapped. Busies don't stay partially open, which you want to see in a low resistance liquidity run. And we had very deep retracement. So all three characteristics of a high resistance liquidity run unfolding here. And note that we had a discount opening range gap of just 7 handles. And what do you know, if you have a small opening range gap, that high resistance liquidity run may unfold. So it's up to you if you want to risk your money on these sessions, on these days, or just sitting on the sidelines, let other people lose their money and you don't lose anything. Up to you. So note that the high after the opening range was formed inside the midnight opening range, but this day we didn't trade into the first presentation again. But note, on Friday, we actually did. Let's dive into Friday's price action. On Friday, again, we had 9:45 a.m. PMI number coming out, 10 a.m. medium impact news drivers, existing home sales, and the consumer sentiment. So, what happened on Friday? The London session, didn't create too much excitement if you ask me. Again, 7 a.m. macro delivery, so creating these relative equal lows over here. To come over here and note, from the 7 a.m. macro, note the delivery which took place. Measured from this candle's low towards this candle's high, almost 90 handles. Beautiful run if you ask me. So 7 a.m. macro is something you want to look into. And at 8:30 a.m. we know that price, that IBDA will seek for liquidity. That's what happened over here. So let me add some magic over here. Okay, I'm gonna remove this these annotations because you can read price action again. Very clear. So what happened over here? At 8:30 a.m. over here, traded into the new week opening gap over here, cluster of new day opening gaps, and note that the high is formed at the first presentation of Tuesday. Yeah, okay, let me put these things away. So if you can't, if you add these levels, the new week opening gaps, new day opening gaps, midnight opening ranges, and first presentations, whenever you see a cluster of them coming together, then I know that around that price level, price will, IBDA will reprice to that level again. And that happens, pretty much every day. So it gives you, pretty much some sort of a roadmap for the day. So at 8:30 a.m. we took this high over here, displacing to the downside, trading back into this SIBI over here, and sell side delivery was next. The thing for me on Friday was that I expected some kind of price action like this to unfold, but pretty much after 10 a.m. because we did have 10 a.m. news. But the high of the session was created even before opening bell, which is typical for 8:30 a.m. news, and we didn't have any impact 8:30 a.m. high or medium impact news on Friday. So yeah, well, to be honest, I was pretty surprised by this. At 9:30 a.m. we opened at 22,186.25. The orange shaded area is the opening range gap for the day, which is a premium opening range gap of 64 handles, which is yeah, pretty beautiful. So it's indicative for a low resistance liquidity run unfolding. So 9:36 a.m. creating this SIBI over here. Retraced into the first presentation, and note how the bodies stay below it. And sell side delivery was next, trading into the daily busy over here, into consequent encroachment. So again, the high of day was formed above the high of Thursday, into the first presentation of Tuesday, into the new week opening gap and cluster of new day opening gaps. Yeah, note the quick and sudden move into Thursday's low. That was not just it for the day, because yeah, Friday was yeah, just an insane day if you ask me. So it traded all the way down, and what you can do at this moment in time, taking this candle's high, the high of Friday, into the low of Thursday, not due to the fact that it is the low of Thursday, but due to the fact that we can measure this buy side delivery over here and measuring it towards the downside to create a symmetrical price swing. Yeah, and pretty much, yeah, during the whole day, starting at 8:45 a.m. Yeah, we had just beautiful low resistance liquidity run into the -1 standard deviation level over here. Do you think this is a coincidence? Well, yeah, that's up to you, obviously. The thing that surprised me on Friday was that we didn't have any deep retracement during the 11:30 a.m. till 13:30 p.m. Time window, which generally creates deep retracements, but yeah, on Friday that really didn't happen. So yeah, beautifully reached. 21,656.5 is the -1 standard deviation level, which is a symmetrical price swing. Don't know if you can read this. And the low came in at 21,652.75, just below the -1 standard deviation level. So remember this. Yeah, you can pretty much use it yeah, in your analysis. So that was it for this week's market review. I want to thank you for participating if you made it till the end of the video. I want to wish you a very, very nice weekend and an even better trading week ahead. See ya!